Good morning, guys. Welcome to the show. I'm really glad to have you guys here. Here's the thing. Great Britain. They've granted them a 6-month extension of the Brexit deal. You know, this is absolutely the worst possible outcome. The world is slowing down into a recession. This is why the yield curve is inverting. And Italy's already entered into a recession. This is a large economy in the European Union. It's stagnant, completely stagnant. Their banking system is bankrupt. The only thing that's keeping them going is Italian bonds. And so the ECB, you know, they're buying them up, buying up the Italian bonds. About 41 billion of them just a month ago. You know, $41 billion worth of worthless Italian debt in order to keep Italy going. This is actually a bailout of Italy. Italy's being bailed out as we speak, and the Italian banking system as well. But they can't keep extending this forever. They're extending it on hopes that Italy's going to pick up somehow. You know? And I'm going to tell you what, France is deeply indebted. They bought a lot of Italian debt. So if Italy goes down, France goes down. We have the situation where in France they're having to lower taxes, and they're actually having to borrow money they don't have in order to appease the people of France. And still, the people of France are not completely appeased. We've got situations going on where Germany right now is just barely staying above recession. I mean barely. This almost ensures what they've done, the malaise that's going to come with the not being anywhere in Great Britain with this whole situation is going to cause economic malaise over the next 6 months. Britain is just barely above recession. Watch what happens in the next 6 months. In the next 6 months, Britain is almost assured, or the United Kingdom is almost assured to go into a recession. It's going to carry Germany down into a recession with it. Now, in the United States here, what do we got going on? The stock market is pumped up through corporate profits and everything else, tax rebate, everything else has propped the stock market up. Mostly corporate buybacks pumped the stock market up to unusually high measures with an economic recession coming. The stock market's going to take a little tumble out of bed. This is going to bring in quantitative easing 4 later on. I wouldn't be surprised if we see quantitative easing 4 before the end of the year. The world situation, the United States is basically what's holding the world up in the United States is in not that great a shape right now. They're not in a recession, but it's not good. The situation is not good. And so we have the whole world teetering on the brink right now of an economic crisis that's slowly developing. Anyway, let's get right into it. Let's open up the charts and take a look at the Brexit, what they're doing. They're not lying here when they say Theresa May has dragged Europe into Brexit's quicksand. And this is possibly the worst thing that they could have done was give this 6-month extension. If they had allowed the hard Brexit to actually happen, it would have been hard, it would have been tough, right? But the road to recovery would have started almost immediately. It would have been a huge shock. It would have stumbled the United Kingdom's economy would have taken a stumble. But once you take that stumble, then it's over. You can start to raise yourself back up again. You can start working toward a recovery. This whole thing that politicians have been doing ever since 2008 till now, by putting off the crisis, is going to intensify the crisis ultimately when it has to happen. And so yet we see another kick the can down the road move. But this is the worst possible thing, because as this 6 months goes by, there's going to be more and more we're going to be heading toward that new deadline that was set 6 months further into the future. And as we head toward that new deadline, there's going to be more financial uncertainty, more problems, an awful lot of problems with what are they going to exactly do with the more than 70 delegates that they're going to elect into the European Parliament that represent Britain. What are they going to do with that? What's going to happen with that? There's a lot of uncertainty surrounding this. May 22nd, I think it is, when they're going to, or May 23rd, when they're going to go into the elections. Anyway, we're going to have to keep our eye on this situation, but this is now turned into yet another black swan that can take the system down. You know? And not as if we don't have enough already. Meanwhile, we got China over there, and we got Deutsche Bank. You know, and there's a number of black swans that can, and keep adding more and more black swans. How many times can you actually duck before finally, pow? You know what I mean? How many times can you duck? And this is what they're trying to do. They're trying to kick the can down the road. They're trying to duck this economic crisis. But sooner or later, we're going to hit the smacker, and it's going to be it. We're going to be in it, you know? Let's take a look at the silver price today. Silver took an awful plunge. It's more of a plunge than the little bit of a bounce that the dollar took. Okay, the dollar took a little bounce upwards, but this plunge is more exaggerated than the move in the dollar. Yeah, it took it right out of its range. It's down $14.99, broke down below $14. Silver's hitting the wall now. In around once it enters into the $14 range, it tends to want to bounce back. So these are creating dips. You always know you buy on dips. You know, that's if you want to do good. So we got a dip today. If you guys are interested in that, take a look. Here we got a dip in gold too. It's down under $1,300, $1295.90. I could see it bouncing back up into its range again after this little dip is over. But it creates a buying opportunity for accumulators, people who are accumulating gold and silver. Let's take a look now at Bitcoin. Bitcoin's taking a little dip too, but Bitcoin could actually take more of a dip. I don't think we're out of this bear market yet, really, and I think that this bear market actually could continue a bit longer with cryptocurrencies, and we could actually see more substantial price action to the downside, than what we have right now. We got a little bit of price action to the downside, and I know all of you guys out there who are HODL and holding on for dear life to cryptocurrencies, you hate to see these dips down in price. You want this bull market to start now. And us to get out of this economic malaise for Bitcoin. We want to get going. We want to get this infrastructure built and get it all moving and get it the price up to $100,000 and everything. But no, you gotta wait while the bear market plays itself out. That's what you gotta do. You gotta wait. So you gotta be patient. It'll get there. Let's take a look at cryptocurrency market capitalizations. It's fell off to $170.9 billion with a Bitcoin dominance of 52.1%. Bitcoin dominance has went up a little bit in the last day or so. We see a lot of downward action in the altcoins today. Litecoin 78.72. EOS is at $5.33. XRP is at 33 cents. Ethereum is at $164.59. Bitcoin Cash is at $263. And that's our coins, basically, today. A little bit of a drop-off in price. We have to keep our eye on this market, but I think that it could go lower before it goes higher. This is just the way the cryptocurrencies markets work. They work like the other markets, except in higher speed. Like, everything happens more in a condensed time frame. Whereas gold and silver, their movements are much slower, it takes a lot longer, but it's a similar market idea, but it just takes a longer period of time. Cryptocurrency moves so much faster. It's like a Lamborghini compared to a turtle, cryptocurrencies are the Lamborghini and the gold and silver market's the turtle. Anyway, let's take a look at the U.S. dollar index today. 97.10. So it is up, you know. It's starting to round off a little bit. It might start to come back down a little bit more this afternoon. If it does, we'll see the price of gold go back up, maybe above $1,300, depending on how much the dollar moves downwards this afternoon. Let's take a look at the Dow Jones for today. And it's up, just a sec, let me refresh the chart. It's up 34 points on the day. They're probably a little bit relieved that the can's been kicked down the road with the United Kingdom. You know, they probably figured this was going to happen. None of this crisis has actually been priced into the markets yet. The crisis is going to be caused by this extension to the United Kingdom. Over the next 6 months, it might become blatantly apparent that the United Kingdom is entering into a recession. And at that point, what's not priced in yet might become priced in, you know, because it might drag Germany down. It might, I think it's going to. I think that over the next 6 months, it's going to drag Great Britain into a recession. And I think we're going to see Germany be dragged down into the same quagmire, you know. And then what we're going to see is this whole thing spread, you know. Recessions start to spread from country to country, and the next thing is be declared as a world recession. The world's financial system is in a recession. But this is the way this recession's been a long time coming. Recessions come on even periodical periods, and right now we're long in the tooth for this recession to occur. It's ready, you know. Everybody knows it's coming. Let's take a look now at the oil price, $63.98. I think that this is only temporary little dip in the oil price. I think that gasoline inventories are getting low right now, and they convert the oil into gasoline, right? Whereas oil inventories are high, but it's going to take the exact same amount of oil. I think it's about 7.0 billion. Is it million gallons or billion gallons? Barrels, I should say, of oil. But gasoline is 7.7 million. I think it's million barrels. Gasoline is in short supply. Gasoline's in short supply, like 7.7 million barrels. And oil is in excess supply of 7 million barrels. So what's going to happen is that excess supply of oil is affecting the price of the market right now, but it's going to disappear when they convert it over into gasoline, which is in short supply. You see? So what we're probably going to see is one matches the other almost exactly, like 7 to 7.7, you know? And so what we're going to see is it's going to rob Peter to pay Paul. That's the old saying, rob Peter to pay Paul. And so what's going to happen here is the price is going to even out when the prices start to go up a little bit again, probably because of that. This is what I expect anyway. Let's take a look at U.S. Treasuries today. And what we see is today a bounce back from what was happening yesterday. So the Treasuries are going this way, and then they're going back this way, taking one step forward and 2 steps back. That's what the Treasuries are doing. Moving gradually slower toward this inversion that's already occurred as far out as the U.S. 10-year. But it's that U.S. 30-year that's been hanging on. You know, it's been hanging on. And like I like to say, it's been hanging diamonds, you know. It's been hanging on out there, that U.S. 30-year. Let me see. What else we got to look at today? I think we've done all the markets. Well, listen. Worst possible choice for the United Kingdom, this 6-month extension. It just prolongs it's purgatory. They've just entered into Brexit purgatory, you know, and it's going to intensify. This purgatory, right now they say, oh, gee, relief, we got a few months. But that time, that clock will tick by, and as it ticks by, and as those few months dwindle down less and less, they'll get more and more anxiety over this whole thing all over again. And so we've just entered into Brexit purgatory. It's going to be extended out for another 6 months. you know, and then the 6 months will run out eventually, but that time it's going to be more apparent that the United Kingdom's entering into a recession. So then they're going to be facing a hard Brexit all over again. Oh my gosh, is this ever going to end? Thank you guys for listening, and we'll catch you in the next show. Bye-bye, guys.